Good morning, good afternoon, good evening, whatever time of day it is, wherever you are. Welcome to today's Grain Market Blast. It is Tuesday, the 8th of July, all day. You join me and the glamorous with a capital G, Angie Setzer, where Angie provides us with a rapid roundup of the latest pricing flows and market moving news in agricultural markets. But before she does, and so that I don't get a spanking, I will get the legals out the way. Nothing discussed on this space session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed, with a capital G, the glamorous Angie Setzer.
Top of
Ha
the morning to
ha!
you. How are
Good
you doing
morning.
today?
I'm good. How are you?
I'm good. I actually feel like my brain's functioning today. Do you ever feel like you're kind of in a like yesterday morning? I felt like I was in a bit of a fog. Like
Well, you
just
say that. I'm feeling that today.
are you?
Yeah,
Well,
I didn't sleep
yesterday
very
you seemed
well.
sharp. So
Yeah,
that's must be we can only be like 70,
maybe,
40.
yeah, exactly that. Maybe tomorrow we'll sync up.
Right. And I'll be able to do math, but let's not hold our breath. So happy Tuesday. If it is in fact your name today, Tuesday. Just kind of here. Yesterday was a bit rough, a little hungover from market action. Basically, it took us all last week. I think in corn, we finished the week up a dime. Beans, we'd finished up like 20 cents or so. Wheat up 16. And we gave all of that back and then some in corn. Like we lost 16, 17 cents. I'm not 100% sure. I kind of blacked out towards the end, and just stopped looking. I'm just like, to hell with this. We don't need to look at it. We'll see what tomorrow brings. And a lot of it was just really, a combination of two different things. First off, we continue to beat this dead horse on trade. And so we'll do kind of get you an update, in that regard. And then of course we have, yield models abound. It's July 8th. And so, two of those things kind of joined forces and just created a beat down in the market. So, point one in that trade, the trade update.
So just before we go any
Yes.
further, so tell us, what is your opinion on yield models this early in the season?
Oh, I hate them. I just do. I hate them at any time. Like, and believe me, you could go back through my Twitter timeline and you will see almost every July, August time frame. I am fist fighting people with my words. And most of the
Look
time
at
in a
me.
normal year, yeah, it's farmers who are saying, oh my God, yield is 10 bushel the acre lower than what the yield, USDA is projecting. I'm like, pump the brakes this year. Now, we're the opposite, but, we'll get to that in a second here and kind of talk about, what folks are talking about. But yeah, it's kind of obvious what I think there. I don't think I'm good at hiding it anyway.
You're terrible.
So yesterday was the day we just got a letter from President Trump. And it turns out that we're going back to 25%. If you're in South Korea or Japan, and you knew this was kind of coming. South Korea, first off, had kicked the can down the road for a while. They'd been one of those where it's like, hey, we've got an election. Like, we don't really have leaders in place yet. Can you just give us a minute? That'd be super cool. And so we really hadn't had much in the way of negotiation with South Korea at all. Japan also has an election in 12 days. And so you've got a little bit of political posturing. You've got a little bit of just general, hey, why do you think you can charge us these tariffs and we're just going to lay here and take it
Yeah.
sort of attitude. And I think it's pissed the administration off because they thought Japan was just going to kind of be one of the first ones to fall in line. Like, if you remember in the initial stages of all of this conversation of South Korea, Japan, like India, like we were going to have all of these trade deals within the first month or so. And we haven't. Japan's really played hardball. And so for a lot of traders, yesterday I got an email almost immediately after Trump's letters were posted where it's like, we have 2.5 million metric ton of unshipped grain sales to Japan and South Korea. They could cancel these. They aren't gonna. But let's go ahead and freak out. You know what I mean? Like, realistically speaking, yes, they could look to source grain from somewhere else, but right now there isn't really an aggressive place to go to. The U.S. is the cheapest provider of corn in the world market until you get out beyond, into September or beyond. You're not really able to really hit a bunch of major offers of high quality corn out of anywhere else in the world. And so to me, a lot of this is just a continuation of negative sentiment, like I said, beating of a dead horse. But we'll see. Japan, South Korea, both of them kind of came back and said, hey, yo, we're trying. And nothing is happening until August 1st anyway. And that's a hard deadline unless you call and ask for an extension. Just so you know.
Yeah.
It's a hard deadline unless you're...
Well, yeah,
me
and Michael were talking about this on the morning blast this morning. It's this August the 1st is kind of what's now seen as the new D-Day.
Yes.
But the way, I don't know, the thing is obviously a lot can change in that time. But the way I'm looking at it is that basically, if you're a country, if you've got any kind of dialogue going on with the Trump administration at that time or a framework or something, you'll probably get a bit of slack and you'll probably get a bit of leeway. All
Yes.
they want to see is people engaging with them because they need to,
Yes.
Trump needs to come out every day and say, oh, we've gone forward with this. We're one step
Be
closer.
prepared for a flurry of trade
Yeah,
deals
exactly.
like every 2 weeks. Yeah, that's where and like I said, I mean, I get it. I get the, oh my gosh, because we went back, we could go back to Liberation Day, tariff levels, but first off, we have 3 more weeks. This is just like the Canada thing again. Like this is like you know what I mean? Like you could go through a list of things over the last 6 months that have happened and let's just,
Escalate to
call a
de-escalate.
spade here. That's just it. And so we love the drama, whatever. And so, yeah, when it all comes down to it, that was a lot of what yesterday was about was just another round of pearl clutching, over demand. Like we've been, a lot of traders have been beating the same, I keep saying this, dead horse. But I mean, you have people that have been negative on corn demand for a full year now who have just talked down, what is one of the largest export books we've had on record and acted like it's just going to disappear tomorrow or it means nothing to the overall market structure. And so that's where I'm getting frustrated is that if you look at the actual grain flows, what's going on at ground level and all of these other things, the likelihood of seeing either country cancel the purchases that they have on the books is very low. And as a matter of fact, for the most part, both of which are dealing with massive food inflation. So the last thing you're going to do is cut their nose off to spite their face by tariffing imports of grains.
Yeah.
Like it's just not happening. And I shouldn't say it's just not happening because I hate when people speak with complete conviction about something they have no control over, but it's a very low likelihood.
Exactly.
Like I can't guarantee, but still, other developments, right? We've got the EU, and they're saying we'll fight back if we have to. No, you won't. You're going to fall in line. You've already said you'll take a 10%. You know what I mean? Like at this point in time, with the situation that we have between Russia and Ukraine and the real need for the EU to kind of work closely with the administration in order to guarantee, defense, in the region and some of these other things, because I think we've kind of seen what could happen, if we do kind of remove ourselves, from the Black Sea. And so I think there's a little bit of, coercion there that you'll see and probably a deal get put together. But could it escalate Thursday night? Could you hear Trump, say I'm putting 50% tariffs on? Yeah, you could. Because if there's not a deal, whatever, it's just how things tend to work. And so, that's where we are for the most part. Like obviously what happens next with all of this? Do we see trade deals announced? What do they look like? Yada, yada, yada. And so here we are, in that regard. Next, anything you want to add there?
No,
I feel like I never let you talk.
No,
I feel
this
so
is
like
good.
yesterday I was
talking
you don't shut up.
No,
Okay, good.
It's all good.
All right, good. Step 2, obviously yield models. I'm not going to pick on anyone. I'm not here to rag on anyone. I'm not here to whatever, but like it is July 8th. 18% of the crop is silking across the country. And so I'm not great at math, but that means 82% of it, I believe, still has to just get to tassel. Like tasseling, silking, whatever, pollination, is one of the more important phases of corn development. Obviously, June, July weather has a huge influence on what, we get from a yield standpoint, or at least the foundation of what is made in the crop. It is far too early, in my opinion, and I am not an agronomist, but I work closely with farmers. I've worked, at an elevator where we had to, decide how we were going to manage the logistics and grain flow and all of these other things that, we were really kind of, dealing with. And the last thing I would do on July 8th ever would be, okay, Joe Farmer, who I'm helping market your grain, weather's been real great. We might as well bump up that yield you're expecting by 10 or 15 bushel. Let's go ahead, yeehaw, giddy up. We don't do that. But for some reason right now on the analyst side of the industry, we're looking at crop conditions and we're correlating that to what yield should be. First things first, when looking at crop conditions, and I'm preparing to do a webinar. I think next week is when we're going to land on it, with Lance Honig from NASS, the director of methodology, at the USDA, the National Agricultural Statistical Service. He's going to be there, Seth, the chief economist of the USDA, or at the head of the World Ag Outlook Board, or his title, he'll correct me, but, you're going to have Seth Meyer and Lance Honig, and we're going to get together and we're going to discuss this, because one of the things that I have done for the last couple of years has been talking with Lance to kind of, grab, okay, what is the correlation between crop conditions and final yield projections by NASS? And Lance has said time and time again, there isn't one. If there is one, it is very, 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 very low. First off, the crop condition report, you need to understand how that information is put together, or at least the background in it. And that is the enumerators, or whatever they're called, the people that go around and collect the data, have no training. There's no uniformal training. There's not a checklist. There's not anything. They go out, they kind of determine, okay, that field looks good. This one looks good. I'm going to put the crop at this much percent good to excellent. They turn the numbers in. The USDA collects that data during Monday, you know what I mean? And they puke it out. It's not as though we have this system, that is well put together. As a matter of fact, I would probably argue that it's gotten worse over the years. And so we have to be really careful. And I'm not saying that because I'm super bullish, or I think that the crop is well below, what people are projecting currently. I'm just saying we got to pump the brakes on this sort of arbitrary number coming out on Monday night and it determining what we think yield will be, especially when we're bumping, in certain parts of this industry, corn yield up by 6 or 7 bushel to the acre on July 8th from, what would be a
Right.
record. Basically, we're predicting 8 bushel above the old record this early in the year, with a crop that was, at least in the Eastern Corn Belt, went into less than ideal conditions and is experiencing far more variability. I understand Iowa looks phenomenal and it's going to continue to look as such, and, Nebraska and these places, but let's be careful on what we're doing. But, those two things together, and it's like a sock of nickels to the corn market's face. Other than that, we'll be watching grain flows, and some of these other things, looking more to boots on the ground reporting, which is one thing kind of going back to models and crop conditions. I got a report this morning from a well-respected group who's kind of putting together all of their information from their folks across the country. And they're like, okay, trend line is still possible. Record is going to be difficult because outside of Iowa, there's too much variability in places. So just be careful. But anyway, export inspections solid again yesterday. We're continuing to see super strong, global demand for U.S. grains. Like I said before, we're pretty much the best quality, best supplier, at a discount. Now Brazil should start to really move more grain into the pipeline, as harvest continues. But we're seeing a continuation of really slow harvest pace because the Brazilian farmer is not in a hurry to lose his or her ass on corn that's being harvested. And so really they're just kind of like, oh, harvest it as I need to. I'm going to put it away. And that's the worst thing. If you're an end user who's waiting for a farmer to have to puke supply, the last thing you want to see is a slow harvest, because it really kind of provides this ability. I always say cash grain oozes, it doesn't move. And so the slower harvest is, the more you're able to see the grain just slowly ooze its way into every single crevice and hole and bag and garage and whatever, especially if you're talking about losing 50 cents to $1 a bushel. And so it'll be really interesting just to see how this market progresses here over the next few weeks, with an absence of what we thought, with the current absence. We need to see if the absence continues. I have to pause myself in how I say that. We have to really watch to see if this absence of aggressive offers out of Brazil, continues, because if these buyers aren't able to source these bushels as cheaply as they thought they would be able to, or as quickly, they are going to turn their attention back to the U.S. most likely, because there aren't really a plethora of offers elsewhere. So we'll continue to watch early harvest results out of the Black Sea. We're hearing that Russia, is probably a little less than what we thought it might be, but traders are kind of keeping their yield estimates in line. The U.S. harvest is starting. Wheat harvest is getting rolling here in Michigan. We're one of the last winter wheat harvest places. So we'll see what that looks like. And yeah, beyond that, we'll just live to fight another day. Probably spend another round of day to day trading on the same stuff. You know what I mean? I feel like we'll see this market kind of remain under pressure for a while because the narrative and the sentiment is so poor.
Yeah.
At this point, we're going to need something. China coming in, some sort of, real obvious problem from a weather standpoint. And right now, neither one of those things look like they're really likely in the short term. So
There's
we'll
a
just
hell of
probably
a drink
grind for a
there.
bit. I know. Hopefully I just did. I hope I'm so wrong in that. Nothing's going to happen. Prices will probably keep going lower. There you go.
There we go. Right. Perfect. Well, Angie, thank you so much, especially with the major jinx at the end. I hope it gets a bit of life into the markets. Listeners, thank you so much as always. I know I always say it, but we really do appreciate you. Whatever you're doing today, stay safe. Try and stay out of trouble. Keep it tight, and we'll see you all tomorrow. Much love.
Have a good one, guys.